very important conversation to be held now. On Monday this week, the JSE's all-share index crashed by more than 12%. This as a plethora of South Africa's biggest companies lost billions in value. The rand remains volatile, losing about 10% in value this week amid global fears over the coronavirus. I mean, if we look at the currency right now, we the last time looked at around about 17 rand and 48 cents against the US dollar. Now, the JSE says it is committed to remaining open. In studio with us, we've got the JSE CEO, Dr. Leila Fourie. Good to have you. Thanks so much for coming in.
Morning, Leanne.
How are things, going at the JSE with our stock exchanges? I mean, after these numbers that I've read, it is red across the board everywhere.
Well, absolutely. It's unprecedented. The all-share index for the year to date is down 27%. Resources are down 35%. Financials are down 32%. We've had the highest volumes in the history of the JSE processing through our trading engines. We are very pleased that we've been able to remain open. Our markets have integrity and our systems have stayed up and have been able to cope with the volumes. Our staff have been working till all hours of the morning to process that very high volume of trades. Our regulators have been incredibly supportive and our banks are well capitalized and they're doing an exceptional job in keeping the engine room running.
When does, and if things get out of hand, trading actually stop? Many may not know this, but, when you're seeing volumes like this, when you're seeing decreases like that, is there a case or a point in time where JSE actually says, we're closing?
Yes. So we typically support price transparency, we support free markets, and we try to keep the markets open in as many circumstances as possible. There are some circumstances, and those circumstances vary. Circumstances could be, for example, but not only these circumstances, where we have some systems down and access to the trading engine is unequal, where we have some systems that go down because of telcos and information is unequal. So it's all about unequal or inequitable access, or if we can't settle, if we have a major issue with one of our traders who prohibits us from settling. So those are the types of things that would cause us to halt the markets. At this point, we halt stocks on a stock-by-stock basis when they breach a certain percentage increase or decrease.
Yeah. I mean, I'm reading that the JSE has widened its circuit breaker trigger points.
Yes.
No one is
going to know what that means. It's a very technical term.
Exactly.
It's basically a road bump.
Okay.
It's basically a road bump which causes traders to stop, think about whether they do want to trade at that very deep level, minus 10% or minus 15%, gives them a 5-minute break, go and have a coffee, think about it, come back and say, yes, I definitely want to do that trade.
Yeah.
So that's all it is. It's just simply a road bump.
I want to talk more, we're talking very sort of high-level stuff here with markets and traders, but if we look at the average South African, they're being affected dramatically by this. So let's talk to that. I'm going to start at the first port of call, and that's pension funds. We've seen trillions being lost already. What are we going to do? What happens here?
So we've seen 4 trillion rand vanish off the JSE since the beginning of the year. We were 17 trillion and we've now gone below 13 trillion, which is eye-watering. It is unprecedented. We do see markets bouncing back, and my hope is that post the corona crisis that we see the markets bouncing back. Markets do go up and they do go down. They're driven by panic in many instances, and this is a supreme example of panic and fear.
Yeah, so the advice is just sit tight. We will get through this. If we're looking at examples, for instance, the epicenter of this in Wuhan, one of the big stories to come out was there was not a single infection that happened yesterday. And that is a big deal. That is a very big deal we need to focus on. So I imagine we need to sit tight, don't touch anything as an investor.
Yes.
Or what advice are you giving?
Well, I can't give financial advice, but what I can say is that markets go up and markets go down. Markets are driven by sentiment. At this point in time, we're at probably the lowest or almost the lowest point in our business confidence cycle. And if we look east and look to what's happening in China, they're starting to move ahead of this virus. And once that happens, we'll start to see business sentiment picking up, confidence picking up. The man in the street will start to buy that extra outfit or couch or car, and so the economy will start to recover.
Yeah. At the moment, though, that's what I'd like to address, because the economy is in a dire situation. So today, at the immediate term, we have interest rate announcements.
Yes.
Some expecting a 50 basis point cut. I don't think, or I wonder if that's enough. What do you think is going to happen?
Indeed. So I've seen some asking for 100 basis point cuts. I think a rate cut is really important at this stage. Firstly, because it sends a signal, and secondly, because it does reduce the debt burden on the people of our country. However, that's not enough. What we're really facing into is small and medium business enterprises are having cash flow problems. Hairdressers, restaurants, general shops are struggling because nobody's coming to support their business, and those are the companies that need cash flow support. So whether we do something like what happened in London, where enterprises are given a 4-month window for their debt, or whether we do something like what happened in America, where Trump is handing out checks. I saw that happening in Australia with great effect in 2008. And so we can't only rely on a rate reduction. We need what we would call fiscal stimulus, which is cash to be pumped into the economy. Now, the problem at the moment is that we're sitting in a very indebted government situation, and so we don't have as much cash to pump into the economy as we would like.
So to explain it in layman's terms, I mean, I have a house, I have a bond, I am working, I may be told tomorrow, Leanne, we don't need you anymore, you can't come in, my income stops, but I still owe money on my house, and this is due to the coronavirus. What happens? Can banks jump in and do what you've said, actually stop loan repayments for 4 months, wherever you are? Is this possible? How can banks help us?
So what can happen is government can partner with the financial sector, and that could be supporting banks to allow a longer repayment window. It could be
without interest, though, because that's where the problem comes in. Will they add more interest on?
Exactly, and this is a complex problem, and I think the banks would have to speak for themselves on this. But what I can say is that there is a cash flow problem, and it's happening at the grassroots level, and it's happening in the mom and pop stores, and we need to do something about it. We need to coalesce between the government and business, and we need to work together to find a plan to solve the growing problem for the man on the street.
I mean, I look at retailers as well. I actually have not been into a shopping centre since Sunday. Yes, I've been into a retail space, but to buy goods and food, but I mean those that are owning shops, and they are liable for paying rent every month, and exorbitant rent. I mean, there's always been this talk of big rentals that are going out to these letting agents and shopping centres. Again, there is a problem. What's going to happen there?
Well, I think it's coming from all angles, because when we shut our borders, which I thought was a very strong and decisive action, and I very much support Ramaphosa's decision, but that came with consequences. We shut our borders to Americans, to Brits and to Chinese coming into our countries, and tourists spend a lot of money. They buy that extra ring, they have their hair done, they go and buy shoes, so they're also supporting the economy. And so there's a compounding effect on the economy. It's not just people staying at home, it's also tourists not being in the environment. So it's a confluence of so many different things, and we are in tough conditions. And I think ultimately there needs to be a level of humanity, and we need to put people at the center of this challenge that we're facing into.
I really like that message, because I do hope that we hear announcements from a lot of corporations, from companies, from individuals that can make or break humans at this time, because there's the story of people that are not going to make it through, not because of the coronavirus, but because of the financial strain, and that is the reality.
We shouldn't underestimate the psychological effect of this virus. People are feeling alienated, their corporate culture is being eroded, they're feeling alienated from work colleagues and friends, and it's a very, very uncertain time, and there can tend to be a panic and catastrophe thinking mentality, and really what we need is calm, and we need people to think pragmatically, and for people to think on a very interpersonal level. Reach out to those old people, reach out to friends that you think may be in need.
Yeah, thank you for talking to us here on the program. The CEO of the JSE, Dr. Leila Fourie, talking to us about the JSE. This, of course, is the largest stock exchange on the continent, committed to staying open for the trade amid coronavirus outbreak, but also other issues affecting the economy. Now, one thing we didn't talk about is the fact that so many people are working from home, whether it's at the JSE or banking. People have now gone and they're working from home, schooling at home. Can we handle all of this? Sakina, I'm going to throw this to you. I think we need to open up that bandwidth. Remember, we were talking about it. Everyone's online now. Talk to us about schooling.